Welcome to the ultimate guide to drawing trend lines in crypto in 2025. And in this video, we're going to break down trend lines A to Z so you can understand one of the most important skills in learning how to trade or invest in crypto, and that is learning how to draw and interpret trend lines. So let's go ahead and just back out and talk about what really is a trend line and why is it important. So let's go ahead and dive into a blank chart here. And let's talk about the 3 different trend lines that you can find when you're looking at any crypto chart. So let's go ahead and look at our first trend line that I'm going to draw here. And a tool that you can use if you are using TradingView is our path tool right down here. And we can talk about the 3 different trend lines. So your first trend line is going to be our uptrend. Okay. Our second trend line is going to be our sideways market, a sideways trend, right? And our third trend line is going to be our downtrend. Okay, so let me go ahead and format these really quick for us. Let's use green for our uptrend. Let's use yellow for our sideways trend, and let's use red for our downtrend, okay? So let's go ahead and define these really quick. So let's look at our uptrend. We'll get that green. Okay, we have our uptrend. We have our sideways trend. And then we have our downtrend. Okay. So very, very simple, but important. So I want you to understand what determines each of these trends. And then we'll talk about why it is so important to understand these. Okay. So with our uptrend, what we are seeing is a trending market where there are a high, a lower high, a higher low. I'm sorry, a low, a high, a higher low, a higher high, and higher lows. So a uptrend is defined by consecutive. Here's our high. Here's our low. Here's our higher high. We'll use HH for this. And then our higher low. And so on and so forth. Okay. We have our high, our low, our higher high, our higher low. And this can go on indefinitely. Higher high, higher low, higher high, higher low. Okay. And very similar, we have our sideways trend, which will be our high and then our low. And then we have our equal high. Okay. And then our equal low. Okay. So that is our definition of a sideways market: a high, a low, equal low. And you can see this by drawing a line across these. And for our uptrend, you can draw a line, a trend line, off the bottoms of these, okay? And the same thing for our downtrend. We're going to have our low. We're then going to have our high. We're going to have our lower low and our lower high. Okay? So here also you can define this trend by drawing across the tops downwards. All right. So just to sum this up, a uptrend is a consecutive higher highs and higher lows. Sideways trend is consecutive equal highs, equal lows. And a downtrend is consecutive lower lows and lower highs. And if you're able to identify these, you are going to save yourself from the biggest mistake that traders make or investors make in crypto, which is buying or selling in the opposite direction. So typically, when there is an uptrending market, This means that the market is bullish and that people are willing to buy at higher prices. The only reason anybody would be willing to buy at a higher price would be because they are bullish on the market. And that's where we're seeing the market trend that way. It doesn't matter what you are, bullish or bearish, it's what the market is saying, right? Sideways market, there's a consensus, this could maybe be considered equilibrium in the price. And then a downtrend is people are selling at lower and lower prices. Why would you sell on lower and lower prices? Well, that means the market is saying that they are bearish. So the worst thing that people do here is they buy in a bearish market. We do not want to see buying in a bearish market, right? But many people do it, and they simply can save themselves from doing that because they could look at the chart and see where the trend is. Now, of course, if they are okay with the market selling at lower prices and they want to buy, that's totally up to them, of course. The investor is the investor. But generally, you would want to buy as people are bullish on the market and the market is uptrending. Same thing with a sideways market. If you want to make appreciation, maybe you're okay with keeping your capital around the same price, but that's really not going to do much for you if it's a sideways market because the market is sitting at the same price. Okay? So generally, traders and investors look to go long in an uptrend, which means to buy. They're looking for the market to go up. Go long in an uptrend. Stay neutral. In a sideways market. Or they don't do anything, right? Buy, sell. Do nothing, buy or sell. Okay. And then go short. And these are just generalizations, okay? For people looking to make appreciation. Okay. Generally, bracket this. Not saying this is what you must do, but this is just general. Okay. So hopefully that's helpful there to get an idea of how to interpret these trends, what they look like, what investors typically use for these trends. Okay. So now what we're going to do is take this a step further and learn how to draw these trends in the real markets and show you the significance of understanding these trends. But before we do this, there's also something called a market cycle. So I'm going to delete this. And often what you'll see in the market cycle is the following. So let me show you this. Even in an uptrend, so we're going to draw this uptrend on different time frames, for example. Let's just draw this yellow. Inside that trend, there are also mini trends. So here is an uptrend. And here is a downtrend. All right. Another downtrend. Uptrend. And there we go. So look at this. Inside this major trend, this is an uptrend. You can see right here, that uptrend. There are uptrends and downtrends within that trend. Okay. So also to note that there are trends within trends. That's a good one to mark down. There are trends within trends. Up, down, up, down, up, down. And this is yellow line is the major trend. So you can actually identify these trends within trends. And we didn't see the sideways market. This is more of a generalization, but often you will see a trend look something like this as well. Where we have our uptrend, we have our downtrend, then we have this pause sideways, then we have the uptrend, then we have the downtrend, we have the pause sideways, and so on and so forth. Okay, and here you will often see that sideways market. Right here, okay? So if you can look at this and understand how the market might work and how trends work, you then have a compelling edge. And here are certain edges that you can think about. So if you are noticing an uptrend, for example, so you decide to buy here, you're noticing that there's an uptrend. Ideally, if that trend continues, that's where your appreciation is going to be. And a lot of people look to buy at these turning points in your trends, right? Even if I'm in an uptrend and say I buy up here, the market is going to go down a little bit first if it's still continuing this pattern and then go up, which might be fine for you, but to know that this is how these trends work. They typically have a push of aggressiveness and then exhaustion, aggression, exhaustion. And same thing on the downside. It would be aggression, exhaustion on the downside too. Okay? So if you understand trends, you can then start to get an idea of when the market might be conducive for you to get into the market. For example, if the market is in a uptrend and it's very extended away from its major trend line, that might be a bad time to go long and maybe a good time to go short. Or if the market's coming down towards its major trend line, that could be that potential good time to go long. But where most people get it wrong is they would actually say go short in this uptrend and go long in a downtrend. So hopefully those help. We're going to go over this in the real markets now to show you. So let's get some examples. We're going to look at Bitcoin. Right now we're looking at Bitcoin on a weekly time frame. Can you guys tell me what direction this trend is in? Can we see those lows? Can we see those higher lows? So let's go ahead and just take a look. Let's start with our low here. We can grab this path tool. We can click low. Here is our first high. Here's our first higher low. Here's our first higher high, higher low, higher high, higher low, higher high, higher low, and basically higher high. So there we go. We have our uptrending market. And if you would start to see that this is an uptrending market, that could be possibly a place where you know that the market is more bullish than bearish. And to the opposite, if you saw Bitcoin over here, where it is downtrending, and you can see our high, there's our low, here's our lower high, here's our lower low, lower high, lower low, lower high, lower low. You then know that this wouldn't necessarily be the place where you'd have the wind at your back, right? Okay. So very simply, you can go into a chart and understand how the trend is. And depending on the time frame that you're looking at, you're seeing, say, this weekly time frame. We have this nice uptrend here on the weekly time frame. The way you can draw these trends, Bitcoin works in more of a curved way, but we can still draw a trend. We can use this, we'll actually use a arrow tool to show you what direction that arrow is pointing. And the way you want to draw a trend is trying to fit it across the bottoms as best that you can. Some people, they only look to touch the wicks. So we're looking at this wick right here. Or they're trying to make the best fit, which maybe I can go to this next wick. And you can see the bodies kind of hit here of the candles, and then we have the wick. The big piece that I see people get caught up on is trying to get their trend lines to fit so perfectly. You don't necessarily need a super perfect trend line. The concept is going to be the most important for you, is what direction is the trend moving. And as you can see on this weekly time frame, we have this uptrend, but we also have our downtrends within that uptrend. We have a downtrend, and then we have a downtrend right here, okay, during this trend. So the further away the market gets from these trends, typically the more dangerous, the more the market is going to potentially correct. The further away it gets, then it typically corrects. And then when the market corrects, the more, I would say, potentially safe spots would be as it gets closer to these trend lines if you're going long in the market. And it's the exact opposite for when you're going short in the market. We can go ahead and look at that. So say we draw this downtrend right here. You can see that the market, once it goes further away from this trend line, if you're going short, that's great. But then there are these uptrends along the way. As the market gets further away from the trend line, there then becomes another uptrend, okay? So there are trends within trends. Now, how do you know which trend that you want to use? Well, the way I look at this is always on these time frames up here. So if you are looking for a longer time frame, say maybe you're looking for a position or an investment over the next week over week or month over month, you can then use a monthly or a weekly chart. If you're looking, holding for days over days, the daily, if you're only looking to hold for a minute, there is also trends on these minute charts, as you can see here. So we have this overall uptrend, but also within that, we have mini uptrends and mini downtrends. Okay, do you guys see that? We have our uptrends, downtrends, uptrends, downtrends. So a critical piece is understanding what your time frame is. If you're like a day trader, maybe you're going to be looking at an hour to minutes. If you are a long-term investor, maybe you're going to be looking at the daily chart or the weekly chart. So let's go ahead and just contrast really quick. We're going to go back to that weekly chart, say we're more of a long-term investor. And we're looking at Bitcoin. And we can just see this trend line. Bitcoin is trending upwards. Great. So maybe we can believe that although Bitcoin is far away from this trend, say it comes back to this trend line, we could believe that that trend might persist. And this would be where we're obviously seeing people buy at higher and higher prices. And now let's contrast this with a downward sloping chart. So we're just going to go to another project called Celestia and look at this. So even though somebody might be really bullish on Celestia, Celestia might be a great project, look at the trend. The trend is not upwards by any means. The trend is actually downward sloping very, very clearly. So if you would have got into Celestia anywhere over here saying, okay, I'm bullish, I want to get in, I can see it's very, trending downwards. I want to get in here, you'd still lose money. I want to get in here, you'd still lose money, right? That is the power of understanding the trend. Is the trend, they say, is your friend until it starts to bend, okay? That's the saying. Saying the trend is your friend until it starts to bend, okay? So what we basically went over first here is that the trend is your friend. The trend is your friend, showing that when you are looking to potentially, say, invest in a crypto project, you will typically want to see that trend in your favor of whatever position you're getting into. If you want to go long and the trend is downwards, that's typically where the trend is not your friend. But in the opposite, say you wanted to go short and the trend is downward, that's where your trend is going to be your friend. Now let's talk about the second part, until it starts to bend. Until it starts to bend, right? And if you remember when we created our little trend here, we drew one where it was an uptrend here, right? There's our uptrend. So here's our uptrend. This trend would be our friend, but what happens if this trend starts to roll over and starts to come down, right? Let's make this red. So we can see here that this trend is our friend until it starts to bend. And that's where you're going to see these trend shifts, okay? So we want to really watch out for this bend part as our next step. And we can see that right here on TIA. Look how simple this was. Say you were looking at TIA. You were noticing your nice trend here. Our nice uptrend. Well, what happens to this uptrend? It starts to bend, and we get this candle at the top here that breaks through the trend to the downside. And not only do we just get this break through the candle, the trend line, we also see this trend starting to bend. And once it bends and starts this new trend to the downside, you can see that the market starts trending the opposite direction. So a lot of times you'll see once these trends start to bend, they will start to have a trend in the opposite direction. Now, the key here is understanding what areas of the trend are very important to where it's a meaningful break. Because a trend still can be an uptrend even though it gets broken. So let's take a look at this. So for example, let's look at Bitcoin here. Let's actually just use this one right here. So we're going to draw this trend line on Bitcoin. We're going to use our path tool. We have our low, we have our high, we have our higher low, we have our higher high, we have our higher low, we have our higher high, we have our higher low, we have our higher high. Okay. Here's our trend line. If you can see that. This trend line is continually, and this is the key piece, continually having these higher lows. Okay, this is kind of almost an equal low here, but continually having these higher lows. That is a key piece. Now, once one of these lows are broken, say this happens, the market comes much further below that last low, there is a greater odds that that trend line is broken. And I'll just show this in a depiction here. Our trend line. Okay. We have our higher lows, higher highs, higher lows. And if this trend line were to come back down here and even get close, it can still technically be in that uptrend, right? But often when this low is broken, this is where we will start to see that trend really start to reverse and come back down. And this is where we can start to get into these patterns like inverse head and shoulders patterns, where the trend line does start to reverse. So we have our higher high, higher low, higher high, higher low, higher high. Then we typically see an equal high. And then we see our first lower low, okay? And here you can see that inverse head and shoulders. We have our head here and our left shoulder and our right shoulder. And then we have our neckline, which is the prior higher low. Then we have this equal low, and then the market breaks through both of these. And very simply, we can see this trend starting to roll over. And that's where the trend is our friend until it starts to bend. So let's go ahead and dive into the Bitcoin chart and start to look at this. Here's a perfect example. Back here, we have our trend, right? We have our trend, we have our low, we have our high, we have our higher low, we have our higher high, but then the market breaks through this, tries to make a new high, and then breaks through this low. So here is that key low. Our high, our low, our higher high. We have our higher low right here, right? But now it's like equal low. Market comes up and then breaks through this. Draw this in red. So we see this inverse head and shoulders here. And after that breakdown, we can see that the market broke down significantly, went all the way down this way. And it's because we started to see this trend bend. Trend is up and starts to bend. Okay. So hopefully that's helpful, you guys, when it comes to drawing these trends. And same with the opposite. If we see Bitcoin here on this downtrend, okay, we see Bitcoin with this nice downtrend. The trend is our friend here, but then the trend starts to bend and turn back up, right? And turn back up. Once you start to see those trends bending, that is where the market is sometimes turning back around. And the way we know that this trend was invalidated was the same exact way as going long. So we have our high, we have our low, we have our lower high, we have our lower low, we have our lower high, we have our lower low, okay? So this is our last lower high right here. This is our last lower high. And if we take a line across that lower high, you can see here that the market still technically could be in this downtrend all the way up to here, but boom, that last lower high here has been taken out. And then the trend truly starts to build back upwards. So we want to pay attention when it comes to trends. When we're seeing these trends, and we're seeing that low, high, low, higher high, higher low, higher high, we always want to mark our last high. So if the market's over here, we're marking that last high. Okay, oh, we got a higher high. It's still in an uptrend. Oh, we have a higher high. It's still in an uptrend. And then the market, say, is starting to come down here. Okay, we have this low here. It's still equal, right? Still equal, still okay. Then we get a bounce upwards, and then we get the break, okay? Once the trend technically breaks one of these lows down here, now these are invalidated, and that is where the trend becomes dangerous, especially dangerous. And even you can see here, the trend line would be broken here, but say the market didn't come down here and just started rallying up. It often can do that because there are bulls back here still. But once it breaks its last prior higher lows in an uptrend or lower highs in a downtrend, that is where the trend starts to get invalidated. So we'll just do one more, talking about a trend invalidation now from the downside. Lower high, low, higher high, lower low. I'm sorry, lower high, lower low, lower high, lower low, right? And we are marking up these lower highs. All right. And say the market comes right here, gets close, but then pushes back up. Okay, still have that lower high. Great. But then the market comes up here and breaks through these. That is where the trend is often in a more compromised position, because this low broke through that low, and say the market then breaks through another low up here. These are key things to pay attention to. So we're just going to do one more on the live charts to kind of drive this home. So let's say Bitcoin here. Here's our major uptrend for Bitcoin. Yeah, there's a trend up here. The trend gets broken, but of course goes down to the macro trend. But for Bitcoin to really be bearish right now from a trend perspective, this is the key low to look out for. If the market comes down here, still higher than this low, but if the market comes below this low, that is where often we see the trend reversal. So we're marking up these lows. That's what a lot of traders and investors do. And we did the one back here on the highs as well. So hopefully that's helpful, you guys, on the importance of trend lines. If you are new, the best thing that you can do is just hop into a chart, zoom out, and ask yourself, where is the trend? Well, if the trend is upwards, that's typically a bullish market. But also, if the price is far away from the trend, there can be a pullback to these trends and the trend is still intact. Okay? You can also see trends on smaller time frames. It's all the same thing. So we can see here our downtrend here on a smaller time frame on the daily time frame. This was that last low. Okay. Bitcoin came up and smashed through that low, and now it is in an uptrend. Now that the market's in this uptrend, you can see it, Bitcoin broke through the daily uptrend, but wait, this is the last low. The market is still hanging above that last low. So if the market breaks below this, that's going to be a higher probability that the trend is broken rather than the market still technically having a higher low. So I hope that's helpful. If this was confusing, go ahead and watch this a few times. The key is to learn one piece of this, apply it, master that one piece, and then come back for the next piece. I don't expect you to have this done in one single try, but hopefully these principles together, you can build, you can practice, and that will give you a huge foundation about the importance of trend lines. So hopefully this helps, and I'll see you guys on the next video.